Good afternoon, everybody. Welcome to our new home buyers workshop, or said the other way, stop renting home workshop. We're here to cover the basics of things that you should be aware of as you go through the process. Any questions that we have along the way, feel free to jump into the chat box. We'll be happy to address them. We'll also be handling questions at the end. My name is David Ratti. I am the branch manager at Envoy Mortgage. I lead the Ratti Lending Team. I've been in the mortgage business about 30 years. Oops, that might help. I've been in the mortgage business about 30 years. I've held pretty much every position in the industry. So I have a depth of background that I feel can help you get educated on the things that you want to be aware of as you go through the home buying experience. Where to start? How much can you afford? Things that you know to look for, like where you want to live, what kind of house appeals to you, when you'd like to move, how does that timing all come together? Well, where to start is always with the money. All of those things are only relevant once you know how much you can afford and that you're looking at the right price point homes. Before we get there, let's talk about the benefits of home ownership. One of the largest benefits is that home ownership can help build wealth. Increase in home values from renovations or improvements on a home. So for example, if you finish a basement, it would increase the living area of the home, which would increase the value of the home. Also, when you own a home, it may help you qualify for income tax deductions because the mortgage interest and property taxes may be deductible. So let's talk about some of the advantages and disadvantages of buying versus renting. We just touched on the tax deductions for your mortgage interest and property taxes. That's big because your rent is not tax deductible. The principal and interest on your home loan would be fixed. So those of you that are renting, if I asked a show of hands for anybody that's had a rent increase from a landlord, I'd probably have a lot of hands in the air. The nice thing about a fixed rate mortgage is that the principal and interest remain fixed for the entire life of the loan. The other thing that may be refreshing for somebody that is looking to own a home is that you have the freedom to personalize it. Most people that are renting are probably under restrictions as far as being able to repaint a room, change carpet, change any of the appliances in and out. Not possible when you're renting a home. So the other thing that is a little bit scary with rentals is that the landlord can give you notice that they're going to be selling the home, or if it's an apartment complex, maybe they're renovating the building and they're not going to renew your lease and you have to move. So the stability of home ownership is a big plus versus renting. Keep in mind that the money you spend on rent month after month, year after year can add up to be quite a bit of money, and I'll show you what that looks like in a minute. In today's housing market, we're in a really unique time. I've said I've been doing this for a long time. This is the lowest mortgage rates I've ever seen. Really the lowest in the history of planet Earth, as I like to say. Just a unique opportunity to own a home. And in many cases, not just a few, many cases, your house payment could be less than the rent that you're paying. Also, as far as what it takes to get into a home, most people are surprised when I tell them that it's possible in many cases that you can buy a home for less than a security deposit and first month's rent, actually less than renting. Let's see what that looks like. When we talk about down payments for homes, there are programs with zero down. There's down payment assistance. We'll get into that a little bit more later. But to get an idea of the amount that you would pay up front down payments are usually referred to in terms of percentages. So for example, on a $250,000 house, you'd be looking at with 0 down, it would be no money out of pocket. And you can look in the chart, the first line, you'll see that the principal and interest would be $1,054 per month on a $250,000 home. Not too shabby. Now, on top of or included with your house payment, there will be property taxes and homeowners insurance. So that won't be the final payment. We'll talk about that more in a minute. But if you look at the $250,000 home with 5% down, 10% down, you'll notice that all the way on the right column, that the principal and interest for the loan is lower for the larger down payments. Keep in mind, interest rates, we're using an example here of 3%. Some are in the 2s. Just depends on the program and the risk profile. All right, so questions to ask yourself. Number one, how long am I going to be staying in the home? That's an important question, because if you're purchasing a home, there's going to be closing costs involved, regardless of who pays them, buyer or seller. You want to ask yourself, how long am I going to be staying in this home? If the answer is 6 months, 8 months, maybe you shouldn't buy a home. Those are the things that we look at when we go through this process. What kind of loan payment do I think I can afford? It's really important that you recognize what loan payment you can afford, more so than me as a lender telling you what will lend and what payment you can have. So I might tell you, you could have a $3,000 payment per month, but you know that doesn't fit your lifestyle. Maybe you like to go out on a lot of vacations, or you have other expenses, or have a lifestyle where you like to go out to dinner every night, and so the $3,000 payment may not make sense. So there's two questions. One is, what can I qualify for, monthly payment? And the other is, what am I comfortable with? How much down payment do I have? How much money do I have available in order to purchase a home? And what new housing costs would there be? So an example might be if you're renting right now and you have a dishwasher and it breaks, what do? You call your landlord and they come and fix it. But when you own a home and your dishwasher breaks, you have to call the appliance repair person, or have somebody in the family that's very handy to come over and fix it for you. Let's talk about mortgage payments, because when it comes down to your mortgage payment, your credit does play a big role in what your mortgage payment will be. There was a time when there was just one rate and everybody got the same rate for the same loan program. That time has passed. With credit scores, there is what they refer to as risk-based pricing. So the better your credit, the better the terms that you'll get. But mine make no mistake, in this market right now, where rates are so low, everybody gets a good rate. Some get crazy good, and some are just good. So one of the things you want to do is check your credit situation. You can go to annualcreditreport.com and get your free credit report to make sure the credit that's being reported in your name is actually accurate. If you have unused credit cards that you know you're not going to use, excessive amount of credit cards, you may want to close some of them. Make sure you're up to date on payments owed. When you apply for a mortgage, you really don't want to apply for a mortgage with past due balances. Not that you can't, but we're trying to prepare you of how you look best. And that's something we can advise you on as you go through the process as well. When you go through this process, you don't want to apply for other new credit as well at the same time. Avoid making major purchases on credit as well when you go through the home process. So let's talk a little bit about your mortgage payment and what it's made up of, because it is a little bit different than rent. When you have rent, it's just the rent. When you have a home loan, you have a mortgage payment that's made up of several components. We refer to it as PITI, P-I-T-I. Principal and interest are the loan repayment, and that's the fixed piece of your house payment. On top of that, each house that you look at will have an annual property tax bill that is due. So we take that annual property tax, we divide that by 12 months and make that part of your house payment. And that is to avoid you from getting a $2,500 tax bill that you forgot you were going to get, because it only comes once a year. So by including it as part of your house payment, when the tax bill comes, we've already been collecting for it all along, and we pay it for you as the lender. Same thing with homeowners insurance. And the thing that may surprise you about homeowners insurance is that your homeowners insurance could actually be less than your car insurance. Homeowners insurance is very inexpensive relative to a $20,000 car or $30,000 car. The homeowners insurance on a $250,000 house might be $700, $800 a year. Not bad. All right. When it comes down to purchasing a home, we talked about it starts with the money. So the first thing we go through is something called a pre-qualification. And the process that's involved with a pre-qualification is first, we will pull your credit. We'll review your monthly income and expenses to look at sustainable affordability. So it's not about how do we get you in, it's about how do we keep you in the home. We want sustainable home ownership. We will take those three items, income and expenses and credit performance, and we'll look at what available loan options there are for you. And we'll go through the advantages and disadvantages of each to select the best loan product to suit your needs. And then we'll provide you a pre-approval letter. Once you have the pre-approval letter, you're ready to go shopping, home shopping. And lastly, you'll see it's in bold, freeze your spending. So when you're going through the process to purchase a home, that is not the time to go and purchase new items. So making big purchases, such as buying a refrigerator, washer and dryer, God forbid, a car. Those are the things that you do not want to be purchasing as you're going through the home buying process, because it could adversely affect your ability to even qualify for the home because you've changed your financial position. So if something like this becomes a necessity, you want to reach out to your loan officer before you do anything. And the big one is that many times companies will say same as cash, 90 days, same as cash, 6 months, same as cash. Keep in mind, those are debts. Those are credit accounts. So you want to avoid those as well. Let's keep it focused on the prize, which is your own home. And then you can look at these items. Because once you own your home, the lender's no longer looking at you. All right. So let's talk about some of the loan programs that are out there and available for most people. So a lot of these programs are available to everybody, and some are in certain circumstances. Renovation loans, believe it or not, you can purchase a home and have money set aside to fix it up. It's called a purchase renovation. It's one loan, and it's really an awesome loan program because, for example, if you buy a $100,000 house and want to put $20,000 of new kitchen or flooring, we can add that into the purchase so that when you go to settlement on your home, when you take ownership of the home, those repairs can be done after you take ownership. It's a great program. We'll be happy to go more in depth if you're interested in that type of program. Then there's the FHA loan. It's the Federal Housing Administration. Many first-time home buyers use the FHA loan because it has a low down payment and flexibility in underwriting. You do not need to be a first-time home buyer to use the FHA program. The VA program, this is specifically for those that have served in the military. The advantages of the program are immense in that it has no money down. It allows the seller to pay all the closing costs, and there's no monthly mortgage insurance on the loan. So it's one of the, as it should be, best loan programs in the country. The other option that we have is a USDA. Believe it or not, the USDA is involved in guaranteeing home loans. The option that the USDA offers is no money down. And mind you, just because it's the USDA, or sometimes you hear it called rural housing, it's not for farms, it's for your home. And it can be a townhouse, it could be a single family home. But the great thing about it is no money down. It's an inexpensive loan option, but it's geographic specific. So high density areas would not be eligible to use the program. So if you're looking in an area that's not high density, Southern Maryland, many areas in Carroll County, Maryland, are eligible for USDA. We simply look them up in a property eligibility search to tell you if the property is eligible or not. The other one is conventional. Conventional loans can go anywhere from 3% down to as much down as you want to put down. Jumbo loans and super jumbo. Jumbo loans are typically loans that are larger than what conventional financing will allow, and that is geographic. So for example, in Anne Arundel County, Maryland, or Baltimore, Maryland, the limit is $520,950. Most people's first homes aren't that high, but if we go above that, there are jumbo loan options. There's also construction loan options for people that are looking to buy a lot and then build a home on top of that. And there's other options as well. There's actually hundreds of programs. What our role will be is to take those hundreds of loan programs and knock it down to about a handful that apply to you. And we do that during the pre-qualification process. There's down payment assistance programs that we can get access to from local and state agencies that enable you to get into a home very inexpensively. I actually was talking to a real estate agent today who has a house listed for sale. And he was asking about options that he could make people aware of to purchase the home. And it was a $250,000 home. And we were able to work up an option where people could actually get into the home for $1,400 out of pocket total. So there's real life opportunity there. And it makes sense to sit down and get pre-qualified to see what you might be eligible for. One of the best tools that we can provide to help you in this process is actually our app. So there's an app that we have. If you text Envoy, DRATTI, to 36260, it will shoot back a link that will enable you to download our app. And the great thing about the app is you can put in a sales price on a house and how much you want to put down. It'll tell you how much the payment is. It'll tell you about interest rate trends, all kinds of neat stuff. And all our contact information is on there with just a click of a button, or a screen, I should say. You can also head to our website. You can get pre-approved in only 15 minutes. Get answers about how to start building wealth today. There's a snapshot of the website there. It's rattylending.com, R-A-T-T-I, lending.com. If you click Get Pre-Qualified in 15 minutes, fill out some information. The first thing it'll do is ask you to set up a secure account. That's to protect your privacy. And enter the information, and we will circle back to you and help you go through the process of what's available for you. You may be surprised at how good it really is. Now, as for questions, I am going to take a couple. I saw the chat box pop up on a couple questions I had. How do I get qualified? Well, we just covered that. You go to rattylending.com and click the button, get pre-qualified in 15 minutes. How much money will I need to save for the deposit? You know, when it comes to cash or money needed to purchase a home, you hear a lot of terms used, like how much money do I need? What's my down payment? What's closing costs? How much do I need for a deposit? All of those have different variations of meanings. So when you're talking about purchasing a home, it's really important to be clear. What is the total amount of money I will need to purchase this home? Is always a question that should be involved when you're looking at a house. As far as how much money do I have to save for the deposit, when you make an offer on a house, it is customary that you would make a deposit with the contract. That deposit may be a $1,000 check that is held until you get the keys to the house. That money goes towards the total cash out of pocket. And when we have more time and are able to do maybe a one-on-one, we can talk about your specific situation. Next question I have here is, I've always rented, so I don't have a lot of credit. Can I still buy a home? Sure you can. Everybody has some credit. Even if it's not reported, there is non-traditional credit options as well. So there is opportunities out there for everybody. And even when it comes to credit, everybody's situation is different. But we have the ability also, if we want to improve somebody's credit score, to run them through what we call our credit wizard. and it will tell us if you do this, this, and this, it will give you a 23-point improvement. So that's a kind of cool tool to help people be able to purchase a home. Another question here. I pay $1,500 in rent. Is it possible to buy a house for that? Absolutely it is. Many people are finding out when they buy a home, their new house payment for their home, which is building their wealth instead of their landlord's wealth, their house payment is lower than what they were paying in rent. That's how crazy low mortgage rates are today. All right, another one here. Should I get pre-qualified first or find a house I like first? Oh my goodness. Always start with the pre-qualification. You wouldn't go to the grocery store without knowing how much money you could spend at the grocery store. It's the same thing with a home. Boy, there's one thing that breaks my heart is somebody's out looking for a $500,000 home and find out they can only afford a $200,000 home. And I have to break their hearts and tell them that. So let's start with the money, and let's make sure you know exactly what your price points are, and then go look for a home and get excited about the home. You may be surprised with these low mortgage rates. People are completely blown away by how much home they can buy, how inexpensive it is. All right. What's your website address? It is RattiLending.com. That's RattiLending.com. Feel free to jump on the website. All my contact information will be in there on the website. And I'll leave it off here as well, that my information here. So if you go to RattiLending.com, or you can feel free to call my cell, you can feel free to pop me an email, whatever your comfort level is, and I will be happy to help in any way I can. Thank you for participating, and thank you for dialing in. And any questions, whether it's related to you purchasing a home, or maybe a relative, or son or a daughter, or a father or a mother, be happy to answer it for them as well. Thanks a lot again, and until next time.